As we get back with you to take a look at our markets here, getting closer to the mid-session, I want to welcome in Oliver Sloup of Blue Line Futures in Chicago. Oliver, the weekend was pretty steamy in a lot of areas. Saw quite a few scattered heavy rain showers out there, but it wasn't general coverage. And I suppose the market is just kind of wondering what to do with that.
Yeah, I don't think the weekend weather was enough to really encourage additional short covering from the funds who, as of Friday's Commitment of Traders report, still have a net short position of about 134,000 contracts. We were kind of looking for the market to fill that gap on a technical basis in that December corn contract, 342 to 344, but we just weren't able to get up there. And if the bulls continue to fail to get out above there, the bears are in the driver's seat. 330 is the recent lows, and that was the breakout point from June 29th. If we break and close below that 330 level, I wouldn't be surprised to see the funds put some positions back on that they have recently reduced. And from the technical standpoint, there's really not a whole lot of support until those contract lows at 322. Now, on the flip side, if we're looking for a little bit of a silver lining, we continue to be a little bit more optimistic on November soybeans. We've gotten out above that gap last week, consecutive closes out above there, and we're seeing some good momentum here today to start the week. Over the last 2 months, we've marked higher lows and higher highs. The next resistance pocket that we're looking at, well, it's right about where we're at right now, $9, psychologically significant. If we get out above there, I think we go retest those highs from a couple weeks ago, closer to $9.12.
What about on the wheat side here, with the big pressure that we have once again on Chicago wheat? Technically, where does that put us here? Because we had a pretty good rally going there for maybe 2 or 3 weeks or so, and it's just kind of flamed out.
It has, and if you've been trading wheat here over the last couple of weeks, you probably have a little bit of a whiplash. We saw a big breakout move above $5 and rallied very quickly and swiftly towards that psychologically significant $5.50 level. There's a bit of a trend line that comes in from the contract highs at about $5.93 back in January. That held. Now we're seeing the funds continue to step in, and I think fundamentally, I think when you get wheat in that mid-$5 range, it becomes overvalued and a good opportunity for sellers to step in and take advantage of it, and that's what we're seeing here. The breakout point of 517 will be first support. If we break and close below that, I think we can go retest that psychologically significant $5 handle.